From Creamer Media in Johannesburg, this is the Real Economy Report. In our top stories this week, Eskom CEO talks about plans to reduce the power utility's carbon footprint. We look at Denel's strategy for the next 5 years. And Neil Pretorius, the CEO of DRDGold, talks about the mining company's turbulent fourth quarter. Jacob Moroga, the chief executive of Eskom, believes the power utility has no option but to reduce its carbon footprint, not only because of climate change, but also as the cost of carbon is expected to increase significantly in future. Chanel Pringle reports.
It is a strategic imperative for state-owned Eskom, as a heavy coal user, to look at reducing its carbon footprint, CEO Jacob Moroga emphasizes.
I think the biggest opportunity to change that is when we make new investments, they must begin to reflect a lower CO2 emission. So the big opportunity and the big plan is going to center around what new technologies we bring in. Nuclear is going to be a big issue. Hydro in the region is going to be a big issue. Renewables are going to be big. So those are the agendas that or the programs that we must bring into play to make sure that our dependence on coal is reduced, and therefore our carbon footprint is also reduced.
Moroga says renewable energy remains a crucial part of Eskom's plans to reduce its carbon footprint, despite the utility facing some funding challenges. Eskom plans to engage with development finance institutions to help fund these projects.
What is emerging is that funds for renewables are beginning to increase, and we want to take advantage of that. But we want to take advantage in an organized way, because while you're solving a funding problem, we don't want to add more funding challenges on it. But this does not mean we're not committed to renewables. We are. And in fact, once we deal with the funding model, we also want to make sure that that funding model integrates our aspirations on renewables in it, so that we really can make a huge move in bringing renewables in this country.
State-owned defence industrial group Denel has refined its turnaround strategy. More on this from Keith Campbell.
Denel developed its turnaround strategy some 3 years ago. A key element has been the reorganization of the group into a holding company with a number of subsidiary companies, some of which will remain wholly owned by Denel, while others have been, or will be, turned into joint ventures with strategic, often overseas, equity partners. The group hopes to return to profitability in the 2012 to 2013 financial year. Denel Group Executive, Strategy and Commercial, John Morris, outlines some of the priorities for the next 5 years.
Essentially, this year we've redefined the strategy. We've taken a very close look at the global financial crisis, on defense trends globally, demand patterns, shifts in technology, shifts in market. And we've redefined the strategy to really focus on growth, customers, and efficiency. And that's really our core objectives for our strategic drivers. We're still continuing that theme around market access, which is very, very important, growing the revenue line through our equity partnerships, existing partnerships, and new partnerships in certain areas, not all of Denel. And then, of course, growing new markets and growing our existing customer base. A big focus on the strategy, the second driver, is operational excellence. Really ensuring that the business is positioned to perform according to specification, perform according to contract. We've managed to ensure that our gross profit margins have increased markedly. The third aspect involves deepening relationship with DRD and our customer base, DRD being our primary customer, and deepening that relationship so that we work in partnership going forward around what technologies will need to be developed to support DRD deployed operations.
South African gold producer DRDGold reported lower profit and production in the fourth quarter. Jonathan Fourie spoke to CEO Neil Pretorius.
DRDGold's poor operating performance in the fourth quarter was characterized by significant seismic activity at the company's Blyvoor Uitzicht mine near Carltonville.
Cash operating profits were obviously affected by the strengthening of the rand. The effect of the rand in the quarter was about 82 million rand to the bottom line. If we sold our product for exactly the same price that we sold it for in the last quarter, we would have been just over 83 million rand up. So that was the biggest impact. But of course, we also bought the balance of the ergo circuit from Mintels, and that added 18 million rand to operating costs without the benefit of the operational throughput. This circuit will probably only reach steady state by September of this year. And then that's unfortunately something that we had to do. It was a deliberate decision to buy it at the time that we did, but of course that added to a total overhead cost.
Pretorius adds that the company is hopeful that it can recover from this.
Well, I think the strategy that we've had in place now for several years of growing our exposure to the steadier surface operations as a means to support the balance of our group during the lean times, and also obviously as they become very nice margin assets when times are good. I think that strategy will continue, and we've got some very clear markers also as to how we want to preserve our cash position and make sure that we don't compromise the group.
And now for a sneak preview of this week's Engineering News magazine. Read our cover story on how South Africa wants technology diffusion to be at the center of any deal reached at December's crucial climate change gathering in Copenhagen. We report on the overall of South Africa's optronics industry with the help of a German company. And Mercedes-Benz plans to introduce a luxury hybrid car into the South African market. And in Mining Weekly this week, our cover story focuses on Eskom seeking a new deal with aluminium smelters. Read about a company led by President Jacob Zuma's nephew and Nelson Mandela's grandson bidding for the provisionally liquidated assets of Bamatu Gold Orkney. And Impala Platinum is bullish on the palladium price due to Russian destocking. That's Creamer Media's Real Economy Report. Join us again next week for more news and insight into South Africa's real economy.
Creamer Media's Engineering News has delivered unmatched insight into the real economy. For breaking news, visit engineeringnews.co.za. The Engineering News, not just for engineers.